Gold never went to 8,000. Silver went to a normal percentage relationship to gold, which, in the last 50 years, silver's been 2.5% of the price of gold, probably, 10 times, 10 different years at the 50. It's been to 2% of the price of gold, 25, 26 years out of the last 50. Well, do 2% of 8,000. Okay. You could go off the page. I don't know where the target is, but I think that the next 3 months, starting next month, in other words, between here and October, prior to the election, I think silver could do things that would be, frankly, awesome.
According to momentum structural analyst Michael Oliver, in 1979, silver experienced a dramatic price spike, skyrocketing from the teens to an astonishing high of around $50 per ounce in just a few months. This extraordinary surge unfolded over approximately 3 quarters, reflecting a classic blow-off phase where conventional market rules seemed irrelevant. Silver's momentum soared during this period, fueled by speculative buying and a frenzy of market hysteria. Before reaching this peak, silver underwent a brief phase of sideways trading, approximately 3 months of consolidation, during which prices fluctuated but did not significantly decline. This phase mirrored a typical mid-phase pause, where momentum indicators cooled off without a dramatic price drop. Once silver broke out of this range, it surged toward its all-time high. Fast forward to 2010 to 2011, and silver returned to the spotlight. After a steady climb since the early 2000s, silver entered another acceleration phase in late 2010. By April 2011, the price had soared to approximately $50 per ounce, marking another spectacular rally. Like the late 70s, this rally was preceded by a period of sideways price action, where silver traded within a 15% range, allowing momentum to reset before the final ascent. Silver exhibited behavior reminiscent of past bull markets throughout this period, characterized by sharp upward movements followed by brief consolidations. Historically, the breakouts from these consolidation phases led to explosive rallies, with analysts like Michael now drawing parallels to the current silver market. They suggest that silver often anticipates Federal Reserve actions, predicting policy shifts that influence the dollar and precious metals. Top Federal Reserve officials recently indicated that the U.S. Central Bank is closer to cutting interest rates due to improved inflation trends and a more balanced labor market, setting the stage for a potential rate reduction in September. The current sideways movement in silver, where it trades within a tight range, suggests a cooling off of momentum without a significant price decline, hinting at the potential for another breakout. We will present clips from Michael Oliver's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
The congestion phase back in 2010 was November, December into January of 2010. Yeah, right there. This zone here, about $25 up to about $29. That was a 3-month congestion zone. And after that was over, you went to $50 by April. Okay. You really take it off in February. So there was actually 3 monthly bars there that we showed a corrective process in silver. While price went into a zone, 15% wide zone of up-down action, momentum corrected from vastly overbought monthly momentum down to the 3-month average again, or close to it. The 79 didn't quite get to it. 2010 did get to the 3-month average. And at that point, the next bar, the 4th monthly bar, meaning in this case, it would have been in January of 2011. Yeah. Yep. You accelerated in April and reached $50 in 3 months. We think we're at that point now where, one, we've begun the acceleration process that began March, April into the May, June, now July range-bound situation here. Silver today pulled back within about 6-7 cents of its 3-month average. As far as I'm concerned, that's good enough. It's cooled off from $8 above its 3-month average down to effectively 0 on that oscillator. Very cooled off now. It was super hot. It needed to cool. And during that time, silver went into a 12.7% price range. Not even as wide as the other ones in that pause period. We strongly suspect that you're near the low of this pullback, or maybe you just saw it. Actually, the lowest low we saw in the pullback was a month or so ago. We got down to 28.50 level. Today, we got down to 28.96, I think. You flip up starting from, let's say, right about this time or into or next month especially. You start to flip up again, and you're entering that final phase that is very much reflective of what happened in late 79 into the $50 peak at silver in 1980, or what happened in between late 2010 into April of 2011, and silver hit 50 again. Now, let's say that happens, and we are pretty convinced it's going to happen. The technicals are behaving too well, too much in line with those situations in all contexts. No matter which way we look at this thing, we come up with the same conclusion. We're in the acceleration phase, and the final dramatic part is about to happen, likely beginning next month. Of course, we have a Fed meeting beginning the end of this month, early next month, Monday, Tuesday, Wednesday next week. Don't be shocked if they cut rates. They've already told us they're going to cut rates sooner than later. And there's enough things going on out there, uncertainty in all kinds of areas, like the yen. They can't allow that to drop. That's impacted by U.S. yields relative to Japan. Therefore, it's a Fed issue. They've got unemployment numbers that fit their models of, oh, we better pay attention to the employment mandate. Powell's in effect said we're cutting rates earlier. No, there's a 100% chance among consensus that they'll do it by September. Don't be shocked they do it in July. And you can go back. My son Brett has done a study on the Fed cuts and how they time in relation to these, and it's very interesting that somehow silver sort of knows it's coming, and when it does come, it takes off. Anyway, but we've got a meeting coming up, and it wouldn't shock me that around the time of that meeting, early next month, we begin to see the launch again, the final phase of this acceleration. Question is, where are we going?
With the Federal Reserve hinting at a potential rate cut and the growing influence of BRICS nations, the global market dynamics could experience a seismic shift. The BRICS countries, Brazil, Russia, India, China, and South Africa, are strategically positioning themselves to challenge the US dollar's dominance in global trade by accumulating vast reserves of gold. This move is not just a show of economic strength. It signals a deliberate intention to introduce a new gold-backed currency that could reshape the financial landscape. The implications of this shift are profound. If gold were to climb to $8,000 per ounce, silver could follow suit with remarkable gains, reflecting historical patterns where silver often mirrors gold's upward trajectory. This potential surge is not merely speculative. Historically, silver has tended to shadow gold's movements, with the silver-to-gold ratio frequently fluctuating, but generally staying within a predictable range. If gold experiences a substantial increase, silver is likely to experience similar momentum, possibly surpassing previous all-time highs. Let's get back to the video.
If we see we start to see firming once again from this range-bound 3-month situation, just like late 79, late 2010, early 2011. We start to see it firm up in this 12.7% range, especially next month. I don't expect $50 to even be a pause point. Not even a pause point. I know every technician out there only has one reference point left on the charts anymore. That's the old price highs at 50 and 50, and they think, oh, that's got to be a barrier. My bet is you don't even pause at it. The question is, where are you going to go on the other side? And I don't know. There are long-term measurements of the ratio of silver to gold that suggest that, if gold goes to a normal bull market peak, and by the way, gold normally has 8 full bull markets. You measure from bear low to bull high, at least they're 8-fold. Well, we're only double plus. You have an 8-fold to go to $8,000 gold. Now, what in the world could cause that? There's a lot of things out there that could cause it. Okay. They're all happening right now, even. And you're not going to incrementally go there. Now, if gold ever went to 8,000, silver went to a normal percentage relationship to gold, which, in the last 50 years, silver's been 2.5% of the price of gold, probably, 10 times, 10 different years at the 50. It's been to 2% of the price of gold, 25, 26 years out of the last 50. Well, do 2% of 8,000. Okay. You could go off the page. I don't know where the target is. But I think that the next 3 months, starting next month, but in other words, between here and October, prior to the election, I think silver could do things that would be, frankly, awesome. And unfortunately, I can't put a tag on it except to say, I'm very confident that you come up out of this zone, you're not going to stop at 50. And then it's white knuckle flight because nobody then has a reference point.
Yeah.
The price chartists jump off cliffs. They don't know where is it going. They have no idea. Okay. Only momentum will help us at that point. But again, following what's happened twice before in the last 50 years, what I just described could easily happen again. And so far, it's happening almost month by month the way it did in those two occasions.
The silver market views the $28.50 level as a crucial support, a reversal from its previous role as significant resistance. The formation of a hammer pattern during Monday's trading session, followed by similar activity on Tuesday, indicates strong buying pressure, reinforcing the importance of the $28.50 level. Given these dynamics, silver will continue to rise, potentially reaching the $30 level. Share your thoughts on Michael's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.